अब शुरू हो जाएगा।
लेकिन बस वो हम लोग का नियम है कि घर का कोई मेंबर होना जरूरी है।
टेंशन नहीं तो फिर सब
तो आंटी को ले जाना और सिखा देना, कोई कंप्लेंट नहीं। सीखी थी छोड़ दी, शिक्षा तो नहीं जाती। लोग वापिस
Mr. Jain, with your permission, can we start today's session?
As you wish.
Okay, sir. Let us start the session, and it is already live on YouTube and Facebook also.
Okay.
So let us start it right across. Welcome, ladies and gentlemen. We welcome you all to this second edition of the Members Forum. CMA, as you know, has started a lecture series called the CMA Members Forum, where we are inviting our distinguished members to showcase their expertise, to share with us their experience, their knowledge. And basically, we are providing a platform to engage our members and be interactive with them. In fact, this session, we are thankful to Mr. MP Jain, Narayan Jain for joining us for this session just after the budget. So we will be getting some good insights into this tax reforms and this budget from Advocate Narayan Jain. Before we ask him to start over, let me just remind all of you that after this, his session is over for about 40-45 minutes, you may raise your hands to ask questions. I'll be asking you to unmute yourselves. I'll be giving you the right to unmute yourself, and then you can ask the question. So let Mr. Jain finish his talk, and then we will request you to ask the questions yourself. Let me just take a few minutes to introduce Mr. Jain, who needs no introduction. I understand he's a very well-known personality, but still I'll take just a few minutes to introduce him. Mr. Jain, after completing his LLB and LLM, that is Masters in Law, from the Calcutta University, has been practicing as an advocate since 1982 in the Calcutta High Court. He is a visiting faculty at IIM Kolkata, National University of Juridical Sciences, ICAI, ICSI, ICWAI, and various institutes. In fact, he has been a speaker and a contributor at CMA also, because when CMA had its own auditorium, I understand. He is the author of the famous books, How to Handle Income Tax Problems, Income Tax Pleading and Practice. He is also the honorary coordinating editor of famous magazine, The Taxman. He is regular contributor of articles in the Telegraph, Sanmarg, Kalinga Chronicles, ITR, Taxman, AIFTP Journal, various other diaries and magazines. He has appeared in more than 300 TV episodes on income tax, as well as the current socio-political economic issues telecast by the Calcutta Doordarshan, ETV, 24 Ghanta, Taza TV, and others. The Ministry of Finance, Government of India, has conferred upon Mr. Jain and his co-author, Mr. Dilip Loyalka, the Direct Taxes Literature Award for the year 1994-95 for the famous book, Kaise Suljaye Aykar Samasya. He is the National Deputy President of All India Federation of Tax Practitioners. He has addressed various seminars in India and abroad. He served as a member of West Bengal Minorities Commission from 2008 to 2011, member of Board of Studies in Faculty of Law of Mahatma Gandhi Kashi Vidyapith University, Varanasi, and delivers lectures there from time to time. He is serving the concern for Calcutta Direct Taxes Professionals Association, and also is a member of the Calcutta Management Association, Calcutta Citizens Initiative, and many other NGOs. We welcome you, Mr. Jain. Thanks a lot for taking time. May I request you to kindly take over and take us throughout your experience. It's all up to you, sir.
Thank you, Nirbanda and fellow friends. I hope you are able to listen to me.
Yes, sir, you're audible. You're audible.
Thank you. Friends, those who are not known to me so well, let me tell you that I am a life member of CMA since 1979, when CMA used to operate from air conditioner market in Shakespeare Sanding. Today we have assembled, as Anirbanda has introduced, to talk on new tax regime vis-a-vis the existing tax regime, the old tax regime, and how we should compare the both as to what is beneficial to the taxpayers. So we should understand it properly and then we should decide as to which tax regime we should utilize. This is open for the taxpayers, particularly who are not having the business income. They can change from year to year. But those who have got business income, once they opt for one system, then they cannot change it unless until they do not have any business income anymore. So we will go into detail. This is an analysis, old or new, which tax regime is better after budget 23-24. You will kindly recall that when our Honorable Finance Minister Nirmala Sitharaman was presenting her budget, and when she said that though there are 122 amendments she has proposed, but she discussed only 5 amendments which she has proposed in her budget speech. And when she said and uttered the words, I propose to increase the rebate limit to rupees 7 lakh. So there was a lot of joy among the members of parliament, but that joy was short-lived. As soon as the rapturous applause started ebbing, FM Sitharaman dropping a punchline added in the new tax regime. That means this 7 lakh rupees tax rebate or exemption was only meant for those who are opting for new tax regime. And now it is no question of opting for the new tax regime. She said that this will be automatic. The new tax regime will be applicable by default to all, unless until they opt for the old tax regime. I think you are able to see the screen also.
Yes, sir, it is visible.
Okay. Now, in short, what are the prominent changes in the new tax regime? The first is the income up to rupees 7 lakh in a financial year will be tax exempt for taxpayers having income, but having income only up to 7 lakh rupees. Once it is 7 lakh 1,000, then we come back. You have played, many of us have played snake and ladder. So even when you reach 98, 99, even that time the snake can bite and you can come back to 9. So it is like that. We those who are having income more than 7 lakh rupees, or even if you do not show in the return, you are showing say 6 lakh 90,000. But due to the power of the income tax officials in the income tax department, suppose they make an addition, they make an adjustment in the income, and they say they have added 30,000 rupees. So our income instead of 6 lakh 90,000, that becomes 7 lakh 20,000. So in that case, we come back to the 3 lakh limit. It is for the general taxpayer, it is 2.5 lakh rupees. But as a special case for those who are falling in new tax regime, for them for the next year, the limit will be 3 lakh rupees. So then again, we come back to that 3 lakh rupees slab, and on the balance amount, we have to pay tax. That was the one. Then the tax rebate, as we know under section 87A of the Income Tax Act, is at present 12,500. That means if somebody is having income up to rupees 5 lakh, then they are not required to pay any tax. But once it crosses 5 lakh rupees, then tax is payable, and the limit will be applicable 2.5 lakh rupees. But now for the next year, those who will be opting for or utilizing the alternate tax scheme, the new tax regime, for them 87A rebate will be as much as rupees 25,000. So that is just double than the present year. But this, I am repeating, this is applicable only if somebody is having income up to rupees 7 lakh. And tax slabs in the tax regime, new tax regime, were 6 earlier, now they are 5. So the basic exemption limit has been announced from 2.5 lakh rupees to 3 lakh for the new tax regime. Now, what are the rates like? You see, from 6 slabs, 5 slabs have been introduced, and for next year, income from rupees 3 lakh to 6 lakh, tax will be payable at 5%. Next 3 lakhs means 6 lakh to 9 lakh, tax will be 10%. And income from rupees 9 lakh to 12 lakh, 15%. And 12 lakh rupees to 15 lakhs rupees, it will be 20%. And above that means above 15 lakh rupees, the tax rate will be highest marginal rate, that is 30%. Most many of you might be remembering when Sri Pranab Mukherjee was the finance minister, they introduced the new direct tax code. And there it was said that income up to rupees 10 lakhs will be taxed only at the rate of 10%. And from 10 lakh to 25 lakh, it will be taxed at 20%. And only if income is above 25 lakh rupees, it will be taxed at 30%. So the purpose was that people were using lot of exemptions and deductions. Government wanted to curtail and wanted to give the alternate offer under the direct tax code. And now that many of the deductions and exemptions have already been eliminated by the government year after year, hardly some exemption deductions are left out. So in my humble opinion, those tax slabs and rates which were to be introduced under direct tax code, say up to 10 lakh rupees, it should have been only 10%, then 10 lakh to 25 lakhs, only 20%, and about 25 lakh, it should have been 30%. I would like to remind the Honorable Finance Minister that when we are making the new tax regime almost compulsory for all, then at the same time, tax slabs and tax rates should have been made more reasonable. And above rates given in section, the section you see, section is not 1, 2, 3, section is 115 BAC and subsection 1A are the default rates, the finance minister said, and various exemptions and deductions, including deduction under section 80C, 80D, and other deductions under chapter 6A cannot be claimed under the new tax regime. Only some items can be claimed, which I will discuss separately. But the deduction, the FM has introduced that deduction from salary and pension will be allowed with effect from assessment year 24-25 under the new tax regime. So that is a kind of relief to the salaried people. And even those pensioners, they will also get this benefit. And in case of family pension also, under section 57, the benefit will be available. So this chart is showing at a glance what I stated just now. Income up to rupees 3 lakh, nil tax, 3 lakh to 6 lakh, 5% on income which exceeds 3 lakh, 6 lakh to 9 lakh, 15,000 rupees plus 10% of income exceeding 6 lakh, 9 lakh to 12 lakh, 45,000 plus 15%, 12 lakh to 15 lakh, 90,000 plus 20% on income exceeding 12 lakh, and above 15 lakh, tax will be 30%. Now, what deductions will be available? What deductions will be available? Limited deductions will be available. I just told you, standard deduction from salary or pension under section 16(1)(a). You know that the amount is up to rupees 50,000 rupees a year. And deduction in respect of income in the nature of family pension, that is under section 57(2)(a), that is also available. And deduction in respect of the amount paid or deposited in the Agniveer Corpus Fund, as proposed in section 80 CCH2, that deduction can also be available. So these three are the exceptions. Means in general, the deduction exemption are not available, but these three will be available. Now we come to the big list of exemptions, deductions not available. Essentially, as I told you, that no deduction or exemption will be available other than the three I mentioned. But just to remind you that the deductions which are exemptions people are claiming, which are the ones which will hit them. The not available deduction exemption include the exemption under section 10 subsection 5 for leave travel concession. Then 10(13)(a), that is expenses on rent, or we popularly call it house rent allowance. Then clause 14 of section 10 is allowance for performance of duty other than those as may be prescribed. Only some deductions can be claimed, say in case of army. Or clause 17, that is allowance, daily allowance for MLA and MPs, that also cannot be claimed under this new tax regime. Or 10(32), that is rupees 1500 per minor child. All these are not available. Then section 10(AA), that is for the units in special economic zone. The general benefit will be available in the general scheme, but those who are following the new tax regime, it is not available. Then subclause 2 and 3 of section 16, that is the entertainment allowance and profession tax, those are also not available. Interest on housing loan, that is very popular. Under section 24 small b, we know that when we buy a house or construct a house by borrowing money, so that interest can be claimed up to rupees 2 lakhs per year in case of self-acquired property. However, in case the property is let out, then this 2 lakh rupees limit is not there. Then other sections where we cannot claim the deduction is 32(1)(2)(a), 32(a)(d), 33(a)(b), 33(a)(b)(a), and few more, that is 35(1), 35(2)(AA), 35(a)(d), 35(c)(c). I'm not going into the detail. Then under chapter 6A, that is the plethora of deductions, there only deductions available will be 80CC(d)(2) and 80CC(h), or 80JJAA, that is providing employment to the people. So that means the most popular deduction, that is deduction under section 80C, as we are aware, the life insurance premium or the contribution to national savings certificate or public provident fund, etc., will not be available. And medical premium, what we are paying, though the amount of premium is increasing year after year, but that deduction will also not be available under the new tax regime. Now we just remind ourselves about the income tax slabs under the normal scheme or old regime. That continues as it is. The income up to rupees 2.5 lakh rupees is nil. Income from 2.5 lakh rupees to 5 lakh is 5%. Income 5 lakh rupees to 10 lakh is 20%. And income above rupees 10 lakh is 30%. Means here in the normal scheme, if my income is above rupees 10 lakh, then on the income above rupees 10 lakh, I have to pay 30%. In case of the new tax regime, 30% rate will be applicable on income above rupees 15 lakhs. Now you see how we decide, unless until we understand that how much will be the tax payable comparatively under the old regime and new regime. In old regime, as I told you earlier, we can claim several deductions, and those deductions can be depending from person to person. If you have taken housing loan 2 lakh rupees, if you are taking benefit of ATC, PPF, LIC premium for NSC, etc., 1.5 lakh rupees. So 2, 1.5, and then the people can also claim the benefit of bank interest. All these are not available in the new tax regime. So we just see a few examples. Say if the income is rupees 5 lakh, then under the existing provisions, we are paying 12,500 rupees tax. And rebate is of course available. And under the new scheme, we have to pay rupees 10,000. Of course, if the income is up to 5 lakh rupees under the new old tax regime and new tax regime, in both the cases, tax is not payable because we will get the rebate. Then if the income is rupees 9 lakhs, then as per the existing rates, the tax is 92,500. But in the new tax regime, tax will be only 45,000. If we can forego the claims of deductions. Then if the income is rupees 10 lakhs, then as per the existing rate, we pay 1,12,500. And under the new regime, we pay only 60,000 rupees. That means the difference is considerable. Then if the income is rupees 12 lakhs, then the existing tax is 1,72,500. But under the new tax regime, it is only 90,000 rupees. That means we stand to gain by as much as 82,500. So that will offset the benefit which we could get by way of deductions. Then if the income is 15 lakh, then as per existing structure, we are required to pay tax of 2,62,500. But under the new regime, we need to pay only 1,50,000. That means here we are getting the benefit, big benefit of as much as 1,12,500. And if the income is above rupees 20 lakhs, then existing structure says that I have to pay 4,12,500. But under the new scheme, it is 3 lakh. So difference remains the same. Whether the income is 15 lakh or 20 lakh, one can get the benefit of as much as 1,12,500. So there are some more important points. That is, the new tax regime will apply by default, as I told you earlier, to all, with effect from assessment year 24-25, means coming financial year 23-24. And one may exercise option to follow the normal regime by applying before due date of furnishing income tax return under section 139(1). And you see, we have to make application if you want to continue with the existing system, and that application has to be in the form which may be prescribed by the Central Board of Direct Taxes. And the new scheme will apply. You see, the horizons have been expanded. The earlier alternate tax regime was applicable only to individuals and HUFs. But under the new tax regime, it will apply to individuals, Hindu undivided families, AOPs other than cooperative society, body of individuals. And the earlier scheme, the alternate tax regime, was applicable from assessment year 21-22 and to 23-24, means the running year. So the horizons have been expanded. That is a good thing. Then option in case of taxpayers having income from business or profession, once exercised, shall continue. Means we can, but one can change it only if he ceases to have income from business or profession, then the option will be available. And the other taxpayer can have the option every year. If you are using the normal tax rate, you can go for alternate new tax regime. So that is allowed. So in short, if one is not taking benefit of exemptions and deductions, new tax regime is comparatively much better. For salaried persons also, it is beneficial as they can claim standard deduction of rupees 50,000 under section 16(1). And tax burden need to be calculated in every case under both regimes, particularly non-business taxpayer may change the option as I told you. So I think that was all about the new tax regime vis-a-vis the old tax regime. The government intends that all taxpayers should pay tax under the new tax regime. This year they have given the option, but maybe in the years to come, it may be compulsory for all. So we should get ourselves prepared, and the government feels that if we are making any payment for LIC or depositing any money in public provident fund or NSC, means saving, whatever savings we want to do, that we are doing for our own good. So they don't want to give in years to come the benefit of the tax deductions. If the time is permitting, Anirbandha, can
Yeah.
we in short touch the other amendments?
Yeah, why not? Means we still have about 20 minutes time left in your lecture. Please.
Thank you, sir. Thank you. The other amendments, in short, we will discuss. You see the new tax regime we have discussed, but there is no change in the tax rates under old regime. And the tax rebate under section 87A we have already discussed. It will be applicable up to ₹7 lakhs. And in new tax regime, the highest rate of surcharge is 25% in place of 37% on income above ₹5 crore. A new tax regime shall apply as I already told you. Then is Central Board of Direct Taxes will prescribe uniform method for valuation of rent-free or concessional accommodation given by employer to employee. TDS on EPF withdrawal shall be 20% instead of the maximum marginal rate of 30% in case the person is not having the permanent account number. And in so far capital gains are concerned, the maximum exemption, you see, we can claim exemption if you buy a new property, new house, either under section 54 or under section 54F of the Income Tax Act. But now the government has imposed a limit that is up to ₹10 crore on investing in new house property. And suppose there may be the big capital gain, say somebody had capital gain of 20 crore. And earlier, if they could have buy another house or flat either for 20 crore or up to the amount of capital gain, because section 54 requires us to invest only the amount of capital gain and not the whole amount of consideration. But 54F says that we should invest the whole amount of the sale consideration. So whatever may be the case, the purpose is that the government wants that those who are having higher capital gains, they should pay some tax, and if they reinvest in new property, then they can claim up to ₹10 crores of the new investment. Then the Finance Minister said that no more double deduction by claiming interest on house property and considering the same as part of cost of acquisition. Means if we have claimed the benefit of the interest on the borrowed capital for house property, then we cannot add that amount in the cost of acquisition of that property for the purpose of capital gain. Then winning from online game will be taxed at 30%, plus of course surcharge cess will be there. They have done it under section 115 BBJ. And this next item is very important. That is receipt from LIC policy on or after 1st April 23. The amount if we receive after 1st April 23 means if we receive it till 31st March 23, there is no problem. But if it is after 1st April 23, then it shall be taxed as income from other sources if premium is paid above ₹5 lakhs in a year. That premium is not for one policy, that is in aggregate. Means if I have got 2 policies, 3 policies, so all the premiums will be added. The rates of tax collection at source, we popularly call it TCS, on overseas tour package has been increased from 5% to 20%. And there is no threshold or limit. Means even if I pay ₹1 lakh to my tour agent for the overseas tour package, on that also I have to deduct 20%. This even 5% was good enough. Increasing it 4 times seems to be creating hardship for the people, or the government wants that people should not go abroad. That may be the purpose. Then some received from Agniveer Corpus Fund by a person enrolled under Agniveer Scheme 2022 shall be exempt. So that is for the limited number of people, and this is a good gesture on the part of the government. So far MSME is concerned, it is said that deduction shall be allowed under Section 80 CCH for contributing to Agniveer Corpus Fund. The next item again is relating to MSME. Government wants to ensure that those who are dealing with MSMEs or they are buying some goods, then they can claim the benefit of the purchase amount as a deduction in their accounts only if the payment is made in time. Means government says that the deduction of purchases or such payment will be allowed only on actual payment basis. Otherwise, it will be disallowed under Section 43B of the Income Tax Act. Then one item is, you see, the income tax officers used to get only 9 months time to complete the assessment, which possibly there was a feedback from the departmental officers also that becomes very less. Means the assessment had to be completed by 31st of December. So now the government has said that they are increasing the time limit by 3 months, and now the time available to officers will be 12 months. Then a new section 115 BAE inserted to provide 15% concessional rate of tax plus surcharge and cess to the new manufacturing cooperative societies. So that is only applicable to cooperative societies. Then the cost of acquisition of intangible assets and rights shall be considered to be nil. And even if somebody has purchased some intangible assets by paying the consideration, or some rights have been purchased, it may be loom hours, other rights. So even then it will be considered as nil. Earlier, in case of self-occupied acquired assets like goodwill, etc., these were considered as nil. But now, irrespective of whether you have paid something or not, it will be nil. Then we come to next item. That is, consideration received from non-resident investors will be subject to tax under Section 56 to 7B. And threshold limit for TDS under Section 194N, that is only in case of cooperative societies, is increased from rupees 1 crore to rupees 3 crore. Where recipient is cooperative society, the rate of TDS continues to be same, that is 2% at the time of payment of such sum. Then donation by a trust or institution to another trust or institution shall be treated as application for the purpose of charitable purposes only up to 85% of such donation. You see what is happening, these charitable trust or institution are required to spend 85% of the amount, and the balance amount they can accumulate. The government says that if one trust or institution or society is making donation to other society or trust or institution, then the full benefit will not be available. It is available only up to 85%. There is no threshold benefit for deduction of tax on winning from online gaming. Means the full amount will be taxed. Then no more exemption from TDS when interest is paid on listed debentures to a resident person. Means it will be taxed even if it is 5,000 rupees. Then deadline for startup to incorporate and be eligible for deduction under Section 80 IAC is extended by 1 year. That means if they are incorporated, because the time limit was up to prior to 1st April 23. Now that time is extended by 1 year, and that becomes up to 31st March 2024. And in short, total 122 amendments have been proposed. That is only in income tax. So it is advisable that all of you should properly understand the provisions which are applicable to you so that you can properly tackle your income tax matters. Thank you. In case, Anirbandha, if there is any question, we can discuss.
Yeah, now if there's any questions, could you please raise your hand on the chat box so that I could request you to unmute yourself. In case you want, is there anyone who would like to unmute and say something? You can please go ahead and unmute yourself. Anyone with any questions? Yeah, Mr. Narayan? Yeah.
Narayan, could you recognize my face?
Oh, yes, 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 dear Annamalai.
After long time, I'm meeting. I am attending from Chennai.
Oh, great.
Good. I'm happy to meet you. Please share your number with me later.
Sure, I will do that.
Okay. Anyway, it was interesting talk and you gave all the details. Huh? Good. Thank you.
We are missing you in Calcutta.
Okay.
Thank you.
Okay.
Is there someone else who wants to ask any questions? Any hands? It seems, sir, either the reforms were too, people will take time to digest the reforms or the changes that has been made. And probably that is the reason that there is no questions at the moment. Mr. Banerjee, yes, Mr. Banerjee is the treasurer of Calcutta Management Association. Yeah, Mr. Banerjee, please, if you.
Good evening.
Good evening, sir.
Hello, sir. It was a very engaging session altogether. I was just going through the script and I definitely ask from Ananjban to help me to give some kind of clarifications if it is required at the later on. I must greet Anirban for making this happen, because for several years we are contemplating to have these sessions. I mean, members engagement sessions. So finally we are here. This is the second edition, and we hope that the future committee will also look into this, because it is the member prerogative to say and share their skills. And you being a very senior members, I pass on my gratitude for your time and effort. Thank you very much, sir. It was great listening to you. Thank you.
My pleasure. My pleasure, Indranilda. And I think there is somebody from abroad, Mr. Basant Kumar Duggad, is raising the hand.
Yes, Mr. Dugar, you can unmute yourself, please.
Tax sparing credit on dividend received from abroad has been withdrawn. Why that industry putting for 20 years, 30 years, 40 years, considering this benefit? What will happen to them? Joint venture is adversely affected.
You are true, sir. Dugar Sahab, you are true.
Yeah.
And
because this is a very big amount on the dividend.
We can talk more on the WhatsApp.
Yes. Thank you very much.
Welcome, sir.
Jain Sahab, you are very nice speaker. We admire to you. At the moment, I am here in Calcutta from Bangkok to attend one program of AIRC. I'm very grateful to attend your program. Thank you.
Thank you, sir.
Thank you, sir. I think no further questions are upcoming. I would request Mr. Banerjee to propose the formal vote of thanks. But before that, I would request everyone, if you require a certificate of the session, you can please write down your email ID on the chat box. and we'll be sending you the link once we receive your email IDs. So may I request Mr. Banerjee to please propose the formal vote of thanks. Mr. Banerjee, please unmute yourself. You are
Yes, thank you.
audible.
Before closing the session with a vote of thanks, I take the opportunity to pass a small message to all my members who are in this house today. Actually, for several years, activity of CMA is little bit limping, and which is further promulgated out of the COVID situations. We are trying very seriously to come out of the crunch. And on behalf of the executive committee, I request all you to, join our hand, so extend your support. You can support us intellectually. You can support us by sponsoring your words, and as well as the members from your organizations. We are trying to impart the skills transfer programs. We are focusing for the future year. Next financial year, we'll be focusing on the skill transfer issues, because I think that is most important. And I request you all to send your suggestions wholesomely, so that we can collate those things before finalizing the sessions for the next financial year. And I thank you everyone for making this session a success. And to the speaker, to the organizers, and the CMA secretary, I record my special thanks. And we look forward for meeting you again in the next few days. Tomorrow we shall be having our cruise. So after 3 years, we are reopening this session. So those who are joining, I will be very glad to meet you again tomorrow. Thank you. I pass on to you, Anirban.
Thank you, sir. I can see a senior member, Mr. Adhikari, wants to ask a question. As a last question, I'll take this opportunity. Mr. Adhikari, you can unmute yourself, please.
Mr. Jain, I have been listening to your talk, which was very, very nice and very, very elaborate. But I have a very general question, which I do not know whether it will be interesting for you to answer. The question is, the faceless assessment has come into play, and as a tax practitioner, how do you find it has helped the people, the assessees, and whether it has really created more problems or it has been solving the problem? How beneficial it has been to the assessees about the faceless assessment that has come about? That is my single question.
You see, Adhikari, this depends from case to case. There are many taxpayers who are very happy with the faceless assessment, as their assessments are judiciously and properly done. At the same time, there are some taxpayers who are not happy, because they say that despite explaining the issues which have been raised by the officers, still the big additions have been made. So see, the purpose of the Honorable Prime Minister, when he announced the faceless assessment and faceless appeal, was that possibly he had some feedback about the working of the income tax department, that there is corruption to some extent. So that was the reason that these faceless schemes were introduced. But with this faceless assessment and appeal, basically concept is good. But what needs to be done is the change of mindset. Change of mindset of officers, that they should act, because they will be in the seat of a judge. So they should properly go through the submissions and papers which are submitted by a taxpayer in their case, and they should make a proper judgment. And there they should not always have in their mind that they are the revenue authorities. The purpose is not always to generate more revenue, but they should try to generate revenue only in cases where it is so desirable. And in cases where it is not desirable to make any addition, they should not make it. This point I have been making at various forums. So I think we should try on that. And if some scheme is good, that should be to the advantage of people. And the assessments which are being done by the departmental officers in the faceless schemes, those should be audited properly, and the department should take proper action about that. That is my suggestion. Thank you.
Thank you, sir. I can see another hand. Do you mind taking one more question?
Welcome.
Thank you. Mr. Purohit, you can unmute yourself and ask the question, please.
Mr. Jain,
Yeah.
how you want to suggest about the filing of returns under new regime or the old regime, provided the assessee has the income from interest on fixed deposits, dividends, and little bit of rent?
Mr. Purohit, it will depend as to how much deductions one is claiming. Various kind of exemption and deductions, if the quantum of those deductions being claimed is not much, then it is better to go for the new tax regime, because the tax burden there, as I explained in course of my talk, will be much lesser. But it will depend from case to case. You should properly compute your income and tax payable under both the schemes, old scheme and the new tax regime. And whatever is beneficial, that you should choose. And you are not having any income from business or profession, and in that case, the horizons are open. You can choose anyone this year, anyone next year. So that option is available to you. Thank you.
Thank you, sir. So we can call it a day. Thanks to all the participants for participating. I can see on YouTube and Facebook, there are a few participants who have been watching us. Thanks to everyone. So we'll be coming back with our next members forum pretty soon. Every month we plan to have at least 2 members forum, because that will take more than a year to allow every member to come and speak on our forum. It will be nice. I think that will be a nice gesture on the part of CMA to engage our members more often. So thanks to you, Mr. Jain. Thanks to you, Mr. Banerjee, for taking time. So we meet again, and to the members who are joining us tomorrow in the get together, you are welcome, and we'll be seeing you. Thanks to all of you.
My pleasure, and thanks the President Narayan Jain Sahib and Dada, you have been behind me for this program. So all credit goes to Anirban. Thank you.
Absolutely.
Thank you, sir. Have a good day.
Thank you.